Yeah, thank you. Today, let us talk about the cash book. Yeah, as one of books of prime entry. Especially, cash book is of four types. We are having four different types of cash book. Today, I want to just remind you. Number one, we have single column cash book, which record only cash receipts and cash payment. Number two, we have two or double column cash book. This records even bank transactions, that is its particularity. Number three, we have three column cash book where we have even discounts related transactions, discount allowed and discount received. Number four, we have in petty cash book, mainly which is special for recording those smaller transactions. It is something that you need to remember. So in today's lesson, we are going to be discussing about a single column cash book. That's why there is an objective we have. We need to be able to define a single column cash book. By the end of this lesson, the expected package you need to get is number one, you are going to end up by getting the definition of single column cash book. Number two, you are going to understand the format and entries. Number three, you are going to know the features or characteristics of single column cash book. Number next, you are going to know rules of debiting and crediting in cash book. Why do we debit, why do we credit? Number next, we are going to demonstrate together the example. We are going to be given a workable example so that everyone is going to know how to record transactions in single column cash books. Number next, it is even a key takeaway as in the importance of cash book in general. So without taking much of our time, would you like just to know what is single column cash book? A single column cash book, it's first of all a book of original entry that is used to record only cash transactions. That is to say, cash payment and cash receipt. And by the way, it contains one amount column in each side, that say debit and credit. Each and every cash book is supposed to have two sides. Number one, debit side. Number three, credit side. Take care. When it comes to format is appearing like that. As a cash book is supposed to have two sides. In debit side, we are having date, details, folio, amount. Then in the credit side, we have the same date, details, folio, and amount. From here to here, it is debit side. From here to here, it is in the credit side of a cash book. So we are going to see common features, something you need to know as a characteristics of single column cash book. Number one, records only cash transactions. That is to say, cash receipts we can compare as an income or cash inflows to the business, and cash payments that we can compare as expenses or cash outflows. This is characteristic number one. It records only cash transactions. Remember, in cash book, don't expect yourself to record transactions related to credit. Only cash transactions are recorded in cash book, whether cash receipts or cash payment. Feature number two is has one column for cash on both debit and credit side. Feature number three, cash book follows single column, single entry systems. We're having double entry system and single entry system, but especially single column cash book follows also single entry systems. So number next, we are going to see the rules of debiting and crediting in the cash book. Why do we debit? Why do we credit in single column cash book? For example, if you are an accountant, if you are a business owner and you receive cash received in single column cash book or in whatever type of cash book, every received cash in a business is supposed to be recorded in the debit side. Every cash paid, that is the expense, is supposed to be recorded in the credit side of cash book. Take care. All you need to remember is that whenever you receive cash in a business, the cash book is supposed to be recorded in debit side. I hope you remember the format. And whenever you make you've made cash payment, you need to record them in the credit side of your cash book. So let us see basically what would be a workable example, especially if a particular company made the following transactions in the month of January. You can see on 1st January, a company or an entrepreneur started a business with this amount of money, 50,000. This is the cash. Because of the fact that this is amount of money that are being invested in the business, so we can consider them as the money that are being received by the business. So from there, they are supposed to be debited. Remember, very simple. On 3rd January, about a stationery, stationery related materials like papers, for 20,000. 20,000. Since bought it's an expense, it is the cash that are being paid out for stationery. So this is an expense. So in the cash book, it is supposed to be credited. I hope you remember. On 25th January, received the cash from Peter. Maybe Peter was a debtor. A company received a cash equivalent to 10,000. So because of the fact that this is a cash receipts, so what is going to happen is that this amount is going to be debited because of the fact that it is an income. Let us see the answer. It is very simple. We are going to use the same format and we record those transactions in a single column cash book respectively. Now you can see that the same format have been used. So here before you go ahead with the format, you need to mention the title. If it is a business, you need to say maybe X and Y Company Limited single column cash book. For the period also indicate to make something clear. So in the date, you need to record that on January 1st, amount of money started a business with was 50,000. We can call it a capital, we can call it balance brought down, we can even call it balance carried forward, we can even call it an initial balance, you can even call it a beginning balance, whatever you can call, just the one of your choice. So it is being just debited. Remember, from here back to here, it is in debit side. So this amount of money is being recorded in debit side because of the fact it is the amount of money that business is receiving in terms of capital. But remember, on 3rd of January, you can see that there was a spending. A company bought a stationery. So that is to say, it made an expense of 20,000. So in a single column cash book, all we are going to do is that it is supposed to be recorded in credit side of cash book. You can see that you need to record that you spend 20,000 for the reason of buying stationery on this date. Everything is clear. But on 25th, you can see that there is this amount of cash, 10,000 was received from Petra on this date. So when you end up by recording all transactions, you need to balance, to make a balance, to balance your cash book. Remember, when we are balancing an account, actually we need to determine, to calculate balance brought down and balance carried down. Balance carried down, it is the balance at the end of a particular period, especially the balance at the end of every month. So this amount of money in debit side represent the amount of money that a business received in the same month of January. So received 50,000 of course as a capital, and later received 10,000 from Petra. That is the total amount received was 60,000. But this side also of credit represents the amount of money that was spent by a business during the month of January. So in total you can see that it is 20. Now, how to find a balance carried down? Balance carried down, it is the balance at the end of every month. The balance at the end of every, maybe a particular accounting period. Especially here we are looking the balance at the end of January as a month. So if business was able to receive 60,000 and spend only 20,000, now what is the balance ending January? The balance at the 31st, final date of January. So we are going to take 60,000 minus 20,000 and we get the remaining balance. Remember, when we find balance carried down, automatically debit side must be equal to credit side. I hope you are getting me right. Now, when I end January, when a business ends January with the 40,000 in cash, it is supposed also to start next month of February with the same balance. So the amount of money, the balance that you start a particular period with, it is called the balance brought down. This BD stands for balance brought down of 40,000. You can see that balance carried down must be equal to balance brought down, because the one you end a particular accounting period with, it is the one you need to start next period with. Do not get confused. So as far as the single column cash book is concerned, let us keep the following in our minds. That is summary and importance. What you need to remember is that single column cash book generally records only cash transaction. Take care. Do not include credit transaction in any cash book. I hope that you are getting me right. Number next, single column cash book tracks cash receipts, that is to say income, and cash payments, that is to say expenses. Another thing we need to grasp here is that it is efficient and useful for small business, the one we can call just a startup, a business that do not have bank related transactions. We shall see in the next type of cash book, where in a two column cash book or double column cash book there is a bank related transactions, but here in single column cash book there is no bank related transaction. That's why it is efficient for a startup business, for a business that is too small, a business which does not deal with bank related transactions. I hope that this is also very simple. As we are concluding, let us leave in a good time of just homework. Actually, dear my students, homework is something that you need to be familiar with. Practice makes it perfect always. That's why when I leave you with the homework, at least it is an evidence to prove how we are in touch. You need to try it. When you fail, you write there in the comment section, and I come back to you with the help. Homework is one question. Do a research and search about what type of transactions that are recorded in true or double column cash book. In your own research, you are going to make a research about the uniqueness, the particularity, the nature of transactions that are recorded in two column cash book. Otherwise, this marks the end of our today's lesson. I love you.